Welcome back. OPEC crude oil production rose further in July in the latest sign the cartel's efforts to reduce output and drain a global supply glut are falling short. The Organization of the Petroleum Exporting Countries output rose by roughly 0.5% to 32.87 million barrels a day last month, up by 172,600 barrels from June. The uptick, which was smaller than the prior month's increase, was driven by higher production in Libya, Nigeria and Saudi Arabia, according to OPEC's closely watched monthly market report. But a research analyst at the financial derivatives company, Amaka Ajegbu, joins us now to tell us how the OPEC report is impacting the global oil market. Thanks for joining us, Amaka. So the much anticipated OPEC report is out. What can you tell us about it?
Yes, and like you said initially, there was an increase in production, OPEC production, which showed an increase of oil supply, and this is related to production in Nigeria, and South Africa. So, leading this report, markets were trending bullish, responding to the U.S. production data. At the moment, see a bearish note in the market. We expect prices to go lower than they did.
Well, what effect is this likely to have on Nigeria?
News we keep hearing is that, as we know, in oil production, without revenue. But at the moment, this has the impact of going down on prices. So when we lose the situation, if we increase our production, it would affect our revenue in the price side. So it's not good news at the moment that oil production is around the world. So relatively bad. This would have an impact on how the government is going to fund their fiscal in helping out the country into a full recovery. So they are going to get in face a source. So yes, it's relatively smooth sailing.
Research analyst at the FDC, Amaka Ajegbu, many thanks for your time. We're moving on now. Tanzania's growth slowed to 5.7% in the first quarter of this year due to slower than expected performance of construction, transport, agriculture and the financial services sectors. The Statistics Office says this is down from 6.8% in 2016. Data from the state-run National Bureau of Statistics shows the construction sector grew 8.4% in January to March, while transport and storage grew 4.1%. The NBS attributes the surge in growth of the mining sector to increased production of gold, tanzanite, copper and coal. And Zambia's central bank has cut its benchmark lending rate for a third time this year as inflation remains below the government's target. The Bank of Zambia lowered the rate to 11% from 12.5%, and that's its lowest level since February 2014. The Southern African nation's consumer inflation rate is near the lowest since 2013, with this year's record harvest of corn leading to lower food prices. Earlier this week, the International Monetary Fund said talks are still ongoing with the Zambian government over a potential $1.3 billion deal. The inflation rate fell to 6.6% in July and has been below the government's 9% target for the year since November. It peaked at 22.9% in February last year. Nigeria's Federal Executive Council has approved the refinancing of $3 billion worth of treasury bills as part of efforts to restructure the nation's debt profile. The Minister of Finance, Kemi Adeosun, says government is taking dollar-denominated loans to refinance our debt on the international market from naira into dollars.
As usual, the Federal Executive Council weekly meeting commenced with the arrival of the acting president, Professor Yemi Osinbajo. After the closed-door meeting, the Minister of Finance told State House correspondents that the government is trying to reduce the cost of borrowing, not by dollarizing the economy, but by refinancing up to $3 billion worth of treasury bills.
As Nigerian government treasury bills mature, instead of rolling them over, which is what we've been doing, we are now going to pay them off by the proceeds of dollar-denominated bonds, which will be issued. And those bonds are 3-year bonds, whereas the Treasury bills on average are 91 to 364 days. So we're taking short money and refinancing it long. Why? Because every time we roll over, if you borrow with interest and you don't pay back, you roll over, you capitalise the interest, you're actually just increasing your debt. What we're saying is, in the long run, because we're coming into recovery, we need a little bit more time to pay. So instead of saying, okay, we'll pay you back in 91 days, we're saying, let's be realistic, we need 2 to 3 years to pay off this money. So we're taking a dollar-denominated loan, which is cheaper than the Naira loan, and we're refinancing the Treasury bills. We're not dollarizing our economy in any way.
Nigerians should also look forward to a crude oil projection of $2.3 million per barrel at an exchange rate of 305 Naira in 2018. The Minister of Budget and National Planning announced this projection as part of highlights in the approved 2017 to 2020 medium-term expenditure framework.
In terms of crude oil production, our estimate projection for next year is 2.3 million barrels per day. We expect it to be broken down as 1.8 million barrels per day regular crude, and then 500,000 barrels a day in terms of condensate. And the price that we've projected for next year is $45.
So far, the federal government has released a total of 1.3 trillion naira as capital project from the 2017 budget. Gloria Umezuke, Channels Television News.
And finally, South Africa has started a review to inspect 72 Johannesburg Stock Exchange securities listed firms to ensure compliance with employment equity laws. The Department of Labour says any company which breached employment equity laws could face a fine of $112,000 or be liable for criminal prosecution to enforce compliance. And that's our program today. Thank you for watching. I am BC Adebayo.